morning. It's Quant Trade Edge. There were a couple of really good patterns this week, and I just wanted to point those two out. There's probably several more, but these are the ones that really stand out in my head, and I wanted to just make sure I made a video because I've been a little lax in doing that lately. So the first pattern is our very, I'd call it flagship pattern, the 4X. This is a daily chart of gold. And as you can see, I don't know if I pointed it out here. I know in the chat room, we were definitely all over this breakout in gold. But again, our 4X pattern is sort of a day-to-day trade. And the specific day I'm looking at is right here. Now, what puts the icing on the cake for this pattern was the rate of change, the 2-period rate of change pattern that accompanied it. So basically we had these two up days, and then this up day had, we call this an ROC flip, where it flipped from up to down. And when it does that, you typically have one down day. And then as you can see, this was kind of a low amount of change, and then it flipped back up, right? This is just sort of a 2 days this way, 2 days that way type of rhythm that you can find on the 2-period ROC. So basically, when we took that out, we were looking for the shorter term pattern from which to set up the 4X trade. So here, and again, what's beautiful about this is this thing is in a solid uptrend, yet on a 1-day basis, we can go short and make 4 times our money. It really doesn't matter. 4 times our risk, sorry. It doesn't really matter if the higher time frame is in a particular trend. So here is where we broke below. Let me take this ROC off now, we don't need it. We broke below that previous day low, bounced up, broke down, bounced up, inside, outside, broke down. And then this is where our pattern kicks in, right? So that line is that roughly that previous day low. We had an up, a down, and an up. That's the ABC pattern that we look for. And then you had an inside bar inside of that. That just lets you know the momentum is shifting. And this would have been our risk, or this was our risk bar. So 37.69.1 against 37.72.5. One tick above, one tick below to pull you in, one tick above as your stop. There was almost no heat on this. As soon as we broke, we went lower. And 4 times that risk, let's see if I remember the numbers right, it was around 56.2, something like that. And I actually wasn't even around. I'd put this trade on and we were somewhere in here, and I had a family emergency, so I just left my OCO in and left. And later, checking my phone, I could see that I got the 4X target on that. The other pattern that I wanted to mention that was just so textbook, and again, the idea is to burn these images into your head of what the perfect pattern looks like. This was a perfect pattern. And then the other perfect pattern was in MicroStrategy. So MicroStrategy's had this big puke off here. I do think this is a little climactic. We'll see. Time will tell. But on the 15-minute chart, and this bottomed on Thursday, we have a very clean 3 pushes pattern, right? There's one push to a new low, one wave up, one push to a new low, one wave up, push to a new low. And remember, in this pattern, you don't want to see an A, B, C up, because then that sort of negates that push. A 3 pushes happens when a market is just really puking in one direction and not getting much relief, and that's what makes it so oversold as to be able to make a bottom. And again, what makes this a divergence is on this push lower, this RSI was 12. This is the 14-period RSI, 12. On this push lower, 1570. On this push lower, 18. So momentum fell on each of these subsequent lower lows. So this was the risk bar, and I played this with stock and with options. On the stock, I just went for 2 times my risk because I didn't want to hold it overnight, at least not in the quantity that I had. So it's what it was, $2.60 roughly, $2.59. So 520 off of this would have been 300.14. I think I remember that number. Is that right? 95. Yeah. Okay. So we got way past that. Okay, we got there pretty quickly. But then I have options for a longer term up move. But I mean, just between Thursday and Friday, we're up $14, and the risk was $3.60. Okay, so I'm sorry. So 720 would have been for 303.20. Okay, that's right. I remember it was on that spike there. So same day trade 2R. If you held it one more day, you got over 4R, close to 5R. I think 4R would have been, or maybe not quite 4R, sorry. This would be 360, 720, 1440. Okay, yeah, it would have been like 4 hours, just a little bit further than 310. But it's also really interesting to see that the exact high of day was 310 on a Friday, where you have weekly options expirations. Expiration happened on the close also. So anyway, the important part of this video is take away this pattern. 1, 2, 3 pushes, higher momentum, and each of these is a one-legged drop. Each of these corrections is a one-legged bounce. Anyway, I hope you enjoy these videos. If you're interested in getting this more live, join our chat room.